What is going on, Elf Hunters? It is a very wonderful Hump Day Wednesday. It is halfway through the week. Let's talk about what is going on yesterday and today. And yeah, we're seeing some pretty good bullshit. But before we kind of go through that, I want to kind of talk about something. Yesterday, I talked about seasonality, and I always want you to feel like you can call me out because I did something yesterday and nobody did call me out. And I mean, I guess that's kind of awesome. Got good people, good community. But the thing I would have liked to have been called out on is when we were kind of talking about seasonality yesterday. We were mostly looking at kind of a daily over the course of a year, and kind of showing like the ebb and flow of seasonality, right? And one thing that I always want to portray on the channel is actual data and data that actually backs up historically or whatever point you're trying to make. What is the actual data? So nobody mentioned it in comments or live stream or anything like that, but one thing that I was kind of flustered at yesterday after I kind of uploaded the midday recap was that there was no hard data to kind of back that up. So what I did yesterday after I got off the live stream is I kind of pulled all the data. Okay, so that's kind of what this chart is. And I know it's kind of bright, but what I want to kind of show is really the ebb and flow throughout the year historically. So this is seasonality, if you would, for the S&P 500. Now, the bottom blue line, this is like the daily return, like what's the average daily return every day for the course of a year. And you can see back kind of behind here, I kind of covered it up here. This is like every day throughout the calendar year, right? There's 3 days that are not included in that data set. The first day is January 1st. It's New Year's Day. We don't trade that day, right? Holiday. The second day, July the 4th, national holiday in the U.S. markets. In U.S. markets, don't trade that day. They never really have. So I don't know if you go back to maybe like 1800s, maybe they traded those days, but I don't know when the actual law went into place. But going back to this data set, goes back to like 1928, I believe. And then the third and last day that is not included in the data set is December 25th, which is Christmas, right? So those are the 3 days that are not included in the data set. Other than that, you will see real quick, you'll see January 2nd, 1900, mostly because I had to do a lookup for all data for January and 2nd. I didn't want to take into account the year, right? Because I don't care about the year. I just want January 2nd. So for all days that were January 2nd, what's the average? And that's what the blue line is down below. So every day, what is the average for that day? And then you add in the return over the year on top of that. And this is what seasonality kind of looks like going throughout the whole year. You can see it's just kind of a steady uptrend throughout the whole year. I kind of thought there was a little bit more of a pullback to kind of in the first 2 months of the year, and there's actually kind of not. I was actually kind of surprised when I pulled this data. And I think my thinking of that was probably more of what the previous year's best returners were. They usually have a little bit of a pullback, and you take a look at Apple to start 2024. They had a very significant drop to start the year, right? That January 2nd day, they had a pretty good drop there. But it is a little choppy to kind of start the year. You get a little bit of an influx there to start, and it's a little bit choppy though. But you don't really have any downturns over the course of a whole month until you get to about May, right? What is that old saying? Sell in May and go away. You could sell at the end of April, beginning of May, buy back at the end of May. And I'd actually back in college, we'd done this analysis, and that was kind of the thing that we had found out was buying at the end of May actually gave you some pretty good returns. But it is still kind of a choppy time period to over a few months. But really July, you can see a pretty good run here for July. And then it doesn't really do much. Very kind of steady uptrend. And then you get to September. September is probably the bigger drawdown month of the year. Okay, so you have two pretty good drawdown months of the year. One is May. Second one, which is, looks like the bigger one, just the eyeball test here, looks like is more September. So those are probably some decent months to maybe be hedging and stuff like that. Anyways, you can see towards the end of the year, most people do know about this, the Santa Claus rally that happens, and obviously the data definitely supports that. So that is seasonality. I always want to kind of show actual data. I don't ever want to wing it, kind of like I did yesterday, but I was kind of more generally talking. But I was kind of flustered when I uploaded the video yesterday that I didn't actually show the data. So I actually already have all this data pulled in this file. So I just had to update it for the data I hadn't pulled yet for the past couple of months. So I pulled it and just did this analytics real quick. So there you go, seasonality. If you ever want to kind of generally know some stats on the S&P 500 over a great deal of time, yeah, you can definitely ask me, because I do have the data pulled and I kind of keep up with some things over different time frames, and maybe different things kind of just be aware of over the long-term trends. So yeah, there's that. And so I do apologize if I did kind of wing it a little too much yesterday and didn't show some actual factual data, because I do want to show some actual factual data along with anything. So there's that. Other than that, got off the live stream yesterday, and the market just kind of, yeah, took off. Tech rotation into tech kind of just basically continued the rest of the day, and obviously, I mean that's where a lot of the weighting is. So it lifted up basically everything else. So there you go. SP 500 went on a nice little run, doing pretty good today. There on the SP 500, up about 0.2%. We got a little bit choppy about 30 minutes after the market opened. And if you want to know why, I was kind of keeping my eye on the market about that time. 9 o'clock this morning, we got, where is it? New home sales. New home sales came in at 0.19 million. The prior was 0.619 million. The prior was 0.698 million. And the forecast was calling for 0.64 million. So that actual number came in pretty low. That's a pretty good drop. And you can see new home sales month over month was down 11.3% there for June. So that's a bummer number right there. Because if you know anything about the market and the economy, housing has a lot to do with economic activity. And so yeah, you can see a little bit of volatility pick up there. But as far as like how we ran yesterday, we are basically at all-time highs right now. So much for my sell call. I do think this is a pretty good spot to be selling, maybe a little bit, just taking some stuff off, because this is like we've kind of topped out in the spot two previous times. We can talk about more about that on the daily time frame. But though Qs, yeah, I mean, you see the Qs just absolutely just took off yesterday. They finished the day up over 1%. Q's doing pretty good this morning, up about 0.4%. IWM, nice little gap up here, quick pullback, and then ran, and it has pulled all the way back. So yeah, I mean, that rotation out of 400, like I guess 99.9% of stocks, and into that 0.1% continues to kind of happen up into that big tech area. DIA negative, pulling back a little bit. RSP a little bit more broadening out, I guess, on the SP 500, kind of a little bit balanced there. Nice gap up, kind of a pullback, nice run, pullback here over the past 30 minutes, 40 minutes or so. Kind of looks like the IWM, just not negative. So it's kind of the way it looks there. RSP still just in this choppy zone. It was not looking great yesterday with that upper wick it was showing earlier in the day, but Qs, money flowing into Qs kind of helped lift up money to flow into other areas yesterday towards the end of the day, and the RSP kind of ended at The highs of the day not looking as bad, but still just does not look good for the RSP. DIA got on its horse as well. Apple did pretty good yesterday. IWM is such a weird one right now, man. It's just I don't know. Let me zoom out here. Man, I have no idea. I mean, outside of this run that we had back in November, December, like the IWM just hasn't done anything. It's just been choppy as heck. So I don't know. I don't know about that right now. And the Qs. I mean, the Qs continue to go game busters, all-time highs. There you go. Looking pretty good there. The thing about the S&P 500, though, what I was going to mention just a bit ago, looking at that daily intraday picture, was like we've got to this point before and we sold down. So that's why, also on Friday where I kind of mentioned, like, not a bad spot to be selling. Like, there's obviously people selling here around this 550 level, and that's the thing. It's a big psychological number. 550. It's a nice big fat round psychological number. Do we go over it? Sure, we might go over it, but usually you get the big fat round psychological numbers. There's people that just sell, right? I mean, it's just sell at 550. It's fine. Sell at 600. Is there some analytical, fundamental analysis reason? No, it's just a big fat round number, right? So, I still think it's not a bad spot to be selling. We have moved pretty far this year, right? Taking into account seasonality, if you want to talk about seasonality, I mean, we have moved up. We are currently up on the year 15.7%. So we'll call it 15.5%. And the market on a normal annual year, total return is a little bit under 12%. So yeah, I mean, for this time of year, we should be around 6% up, 6 to 7% up on the year, 6.5% or so. So yeah, we are well above normal seasonality returns. People asking about seasonality, so I would, I would just continue to probably sell covered calls. Honestly, that's probably what I would do. I would reduce upside gains. That's kind of what I was thinking. Reduce upside gains. And yeah, there you go. Anyways, we'll continue to move on. VIX, not really doing a whole lot. Kind of flat on the day. All right, dollar. Ooh, dollar breaking down today. Let's see how you look intraday. Did you break down? They broke down when we got that housing data. Obviously, they were moving down pretty good, but you can see a nice breakdown when we got that housing data. Okay, so this could be. We could have had the breakout in June, break higher. This could be the quick snapback right here to these double highs. Maybe we bounce here. Yeah, that's all I got. I mean, it's also one that breakdown could also lead into new sellers. And then you got the GLD breaking higher. Makes sense. Dollars breaking down. Gold kind of looking strong here. Looks pretty good. Just continue to be buyers of any dips there. Yields breaking down. Yep. So yeah, yields broke down pretty good when we got the housing data at 10 a.m. Eastern. So there you go. Dollar and yields both breaking down with that housing data. Be curious to see what unemployment jobs data comes in at tomorrow. See if that has an impact. 10-2 inversion pulling back down a little bit. HYG bouncing pretty good. So all the bonds should be bouncing pretty good. Yeah, all the bonds are doing pretty well. LQD bouncing pretty good. Got a little bit of an abandoned baby here. 2-day abandoned baby here on the LQD. Okay, looking pretty good there. And TLT. So TLT did hold this uptrend line. And we'll see if continues to hold it. But it did just kind of fill this gap here. So bonds, I don't really worry about the gaps too much. But Yeah, we'll see what happens here over the next couple days on some of these bonds and yields. All right, taking a look at sector performance. Well, it makes sense. Tech is leading the day. I mean, the Qs are up 0.5% currently. Utilities also doing pretty well. Discretionary is doing pretty well. Materials doing pretty good. Industrials doing pretty good. Energy is kind of in line with the market there. Real estate underperforming. Communications also underperforming. Financials, staples underperforming. Healthcare, lower end of the day, almost down 1% on the day. Jeez. Intraday, tech. Money been flowing into tech, especially here over the past 30 minutes, 40 minutes or so. So, yeah, tech doing pretty good. Utilities doing pretty good, although they've been coming back down here over the past hour. We got discretionary is a little bit underperforming. Industrials, a little bit underperforming. Materials, communications, energy is underperforming. Real estate, staples, financials underperforming. Yeah, healthcare just really getting hit over the past 40 minutes. That sell down there.